This is the difference, once again, of good versus great companies. The good companies will get modest improvement. The great companies they're circling around you because they are just doing so much more effort. And then you add to the multiple, if you may, of AI today. They're not just increasing you 3x more, they're doing it 100x more because of their ability to do things because they're using technologies to get there.
You touch on multiples. That's another subject that close to heart. A lot of myself included. Somehow, I believe that usually businesses sell at 3, 4 multiples. Depends on the risk level. What I found is it actually depends on where you're holding with your profits. Is one, right? Because there's a lot of other details into it, but the primary one, the capitalization, is actually the higher your profits, especially above million, they changing based on the risk level, right? And having a management system in place with the strategies that you're implementing and all those things function without the business owner himself or any other key man or other things that fall into it. Climbing up, there's a struggle, tension in the air. But the underdog prevails, we here to declare. To the top of the mountain where champions stand. Failures can't break us, we taking command. Yeah, it's a journey, climb to the peak. Scaling businesses, who it ain't for the weak. Growth is the game, we play it real tall. From the bottom to the summit, we rise, never fall. Interview the legends, success stories told. Risepreneurs, hearts made of gold. Strategies unfold, in the struggle grace. Hardship and challenges, yeah, we still embrace. Welcome back, everyone, to another episode of the Risepreneur podcast, a show dedicated to all the entrepreneurs, business owners out there who's looking to grow, scale their businesses, and ultimately properly exit at the highest valuation. Today, we have a special guest who is going to reveal a bunch of things in the strategy world for us. His name is Carl J. Cox. He is a business growth strategy expert. He is also a best-selling author of the book Lost at CEO. He is also executive coach and a podcast host of a couple of podcasts, Measure Success and the $4 Million Strategies. He's also was awarded a couple of awards. One of them is CEO, Growth Strategy CEO of the Year, and a bunch of other achievements. I'll let Carl share some of those with us. Carl, say hi.
Thank you so much. It's an absolute pleasure to be on your podcast today.
Thank you. It's impressive. You have an impressive past, presence, and I look forward to also seeing what the future brings. Looks like you're making an impact. Can we, as a start, as a beginning, go back into the time when you just started, right after high school, or you've been entrepreneurial all your life, or did it start after you got your career?
No, that's a great question. I think I started out being an entrepreneur picking strawberries in the local fields around where I live. And I tell you what, that's talk about hard work is picking strawberries. You get out early in the morning, you get bussed out to a field, and basically you made as much money as you could pick. And that was probably my beginning years of entrepreneur. I remember even later on, I picked other berries. My first actual, what I call real one, is we found when I was in college, we ended up franchising off of this utility like refund service. I worked for a company as an internship, and then somebody I knew, I helped them start up that company in the Portland, Oregon area. And that was what I'd call my true first entrepreneurship. But then I got married pretty young, and matter of fact, right after college, and started having children. And so I was like, oh, well, I better make sure I can provide for my kids. And so I departed a little bit away from entrepreneurship, and I did the safe thing. Become a CPA, ended up working with the big four accounting firms, and then I just moved my way up on that process. But what was interesting is I had this passion. I wanted to teach and teach history in high school, coach high school football. And so I actually built one of my other businesses. It was called Carl J Consulting back then, and I thought I was going to do consulting. It became a tax business and grew that from. That was, well, the whole purpose behind that business was as I was trying to help subsidize my income so I could teach. So it was more of a lifestyle business, so to speak, but it was legitimately doing taxes for clients. Grew up to a significant amount, but then I got asked by the CEO I was with, he said, Carl, we know you're planning to leave us, but we're not going to continue to invest in you if you're going to do this. And so I had this real dilemma. of what
Wow.
do I do next? And I was unsure. I really, because I felt called. I was like, for me, there's like a spiritual moment. I was like, I was supposed to coach and teach. Like, this is what I was supposed to do in my career. But I said yes to the business side. So I ended up selling the tax business. And then I went forward and became a CFO, basically age of 30, started getting all these interesting opportunities. So that I became, I would call more an intrapreneur at that point in time. And this is how it went. First, I just did my normal, what I call accounting stuff. But they said, hey, Carl, can you take over IT? And I was like, by the way, I don't know anything about IT. Meaning my IT is, did you turn off and on your computer? That's about the extent of my IT knowledge. And but we fixed IT. And then they said, hey, Carl, can you take over product support? And I never, you give me a hammer, I'm going to break that nail. That's not my skill set. But I fixed technical support. The team did. We did as a team. We ended up getting great technical support service. And then, hey, Carl, could you help basically set up a distribution center in Europe? I'd never been to Europe before in my life. I was like, sure, let's give it a shot. Ended up setting up 3 distribution center in Europe. After that, they were like, hey, Carl, can you now take over a supply chain in Asia? And I was like, sure. And so I started understanding that process. And the next thing they're like, well, now can you just take over our manufacturing operations? So I kept on saying yes and yes and yes and yes. And at the same time, I was getting taught strategy. So I got to manage every functional department in a business through my career. But at the same time, I was being taught by Fortune 500 executives in a small company how to do strategy and execution the right way. And what a lesson that was, right? Nearly a decade, I was working with a small company most people have never heard of, but I was learning how to run and learn about strategy, learn about execution, learn about management, and doing things that I'd never done before. And that led me to then another company where we ended up tripling that business in 3 years, went from 70 employees to 450 employees in 3 years. And I got involved in many different things. We invested in companies. But then I had my first, what I say, real, what I call modern day entrepreneurship, not when I was a young kid without much risk. It was I actually opened up the US office for an Australian software company. I put my own risk capital in, my own money into it, got that started. And in 3 years, we grew that from, let's see here, 50 clients to 350 clients in 3 years. Became 50% of the global business. It's amazing. An awesome
Wow.
experience. We ended up converting that into stock into the parent company. And the really cool thing, it was a strategic planning software. And so I got to see all of these different methods and ways how people did strategic planning execution, kind of, and the surprising thing was I didn't realize, I thought everybody was good at it. I'd been in my career, I've been with 7 different companies that gone at least 2x in size. And so I just thought everybody knew how to do this. But when I actually started looking at every people's results, I realized it was the minority that did well. And most people were not very good at it at all. And
Hmm.
so when we had so much success with the private equity firm, with Cascade Strategy, the CEO said, hey, Carl, why don't you open up our new global consulting business underneath Cascade Strategy? And that's when I politely declined. And I decided to open up 40 Strategy, the business that I currently have right now. We're currently the fifth year business, and we've been able to double the success once again multiple times through that. And that's when we've had a lot of fun. Of now we get to provide the insights I've learned over my career to help other people help to grow their businesses. So about a half of our business is working with private equity firms on turning around portfolio companies. And the other half is working with just privately held companies that are trying to either grow or turn their companies. And so that's where the extent of my work. And so it's how do I say, I feel like I have the greatest job in the world. Not only have I learned so much through my career, but now I get to help entrepreneurs help build their business. And that's more or less the story of my entrepreneurship career. And I'll say this, I'll never want to go back. You want to say never,
Hmm.
but I've really enjoyed being able to, once again, have my own business, have the flexibility of having my own business, but I really love helping other entrepreneurs run their businesses.
Awesome. Sounds like you found your calling, your purpose, since it's
Absolutely.
energizing you. You can feel it in your conversation, enthusiasm. So, Carl, what made the people ask you to solve things for them? My assumption was you were positioned on the financial side as a specialist. To ask you for things outside of that, they had to perceive you more like a generalist, that you would be open minded, that you would take up on a challenge and figure it out. So, what was about you that you shared that made people approach you and ask you for things that not really your specialty?
That's a great question. I think at first, and I think it is important for anything, no matter what you're in, is you got to do your first thing good first, right? if you can't provide what I call expertise and knowledge in what you're currently doing, people aren't probably going to ask you to do something else. So in my career, I've had the ability to have success with it. But the other thing that I've been able to do, once again, my background is as was a CFO, CPA. A lot of times people in that room don't communicate very well, right? They tend to be introverted, look inside, look at the books.
Very detailed.
That to me is just the basics. If you can't convey why the numbers matter, you really haven't done anything really well, right? And so a lot of my time I was spent at the number two in a company, meaning being the right hand man, so to speak, for the CEOs. And I loved that position of being able to be their trusted advisor, to be able to help them to grow their business and also being willing to say no, right? And what I found was this was a surprise, is I found that the CEOs really appreciated me telling them no because most people told them yes. And I think that there's two things there to answer your question. I think number one is I was willing to, first of all, get good at something. Two, I was willing to say yes to try something that was a risk. And three, I was willing to say things they didn't like. And I think the combination of those three things have continued to help, and to this day, propel my career. Because this is the sad part. If you're an entrepreneur, once again, if you're listening to this, I'm going to just tell you something that you might not want to hear, is your employees are not telling you the truth most of the time. And it's not because they don't like you, and it's not because they're not trustworthy. It's because they have the fear that they're going to lose their job if they tell you something bad. Okay, it's the basics of basics. We're trying to provide for our family. We're trying to pay for rent. We're trying to pay for our mortgage. We're trying to, help pay for our car payment. And so they are afraid to tell you the whole truth. And so when you could find somebody who's willing to tell you the whole truth, they were like worth their weight in gold, because they recognize, and let me tell you an example of how I learned this the first time the hard way. I remember when I was growing up in my 20s and learning how to do businesses, I would say the same dumb accounting joke, sort of like a dad joke, okay? And says his same dumb joke, and pretty much nobody would laugh except for one person being kind of kind. And then I continued to grow, and a few more people would laugh. I became a CFO. But when I became a CEO, the entire room laughed. Okay, same joke.
Ouch. That's a
Same
reality.
delivery.
Interesting how you connected. So people, they hire you on a chain. People just support you no matter what.
Yeah,
They
sorry.
want to please you.
Yes, they do. They want to please you because at the end of the day, that's how they're getting paid, right? It's only us entrepreneurs that have the true risk capital, right? It's our risk. We're
Yeah.
the ones, if we don't be successful, we don't pay our mortgage, right? So we have to create the business, create revenue, create profits, be able to help provide. But if they're just being paid and they don't have any risk capital into it, yeah, you're going to get every once in a while, you're going to find somebody who's going to tell you the truth. But most of the time, they won't tell you the full truth. And this is why I'm a big believer, and I'm not saying this for my own business, but I'm a big believer that you should be hiring external coaching to give you honest
Feedback.
insights, honest feedback. That's right, because you're not going to typically get it from your internal employees.
Sounds like a dictatorship versus democracy. So if it's that, that has to be one of the principles of one of the core values in a company, to be that open to express yourself without having a fear that you would be possibly fired for speaking up. In your experience, how entrepreneurs that already kind of established and have a team, how do they bring that core value in?
So it can happen. And by the way, that it's not impossible. And probably people are listening, oh, Carl, I've got great, honest employees and they're great and they always tell me the truth. I'm not saying they aren't, but they probably aren't telling you everything. So they might not be lying to you, but they're not giving you full disclosure. One of the ways you help bring in that full disclosure is you have to create real honest trust. And so one of the ways I've seen this done in the past, matter of fact, this happened as a result of a failure that I had. We had a really good implementation of a system, and then we tried to put it throughout the rest of the organization, and it failed because they didn't want change. So ultimately, after everyone told me that I was not following every core value, by the way, we had integrity as one of our core values, and they were saying we weren't people first, and they were blaming all the things on me that because they felt it was a failure. But eventually we had these open forums and we started listening to the employees and letting them vent. So we did a couple important things here. Is number one, when they let them vent, we didn't correct them. We just listened. Two, we wrote down our findings from what they said. And then three, we fixed those things that were broken. That helped create real trust.
Yeah.
and then we were able to create a more trusting environment. But it's not easy, right? And even then, it didn't mean they were doing everything. But the reason why, by the way, they got to that point is because they were so mad. Like somebody felt like they'd stole their cheese, their old system, literally their own homegrown system that they've been using for 10 years, they no longer could use. And even though it wasn't the best solution, they were just mad. They were mad that somebody changed something they've been doing for such a long period of time. And
Yeah.
but hearing them out, going through the process, we ended up creating a win. But it was not easy. As I said, I was called every dirty name in the book. I was called I was violating any core value. But I tell you what, once we fixed it, it was a massive win. And we had great relationships and we fixed these things. But we had to go through that hardship first before we were able to get to better transparency.
And you experience that hardship not everyone can handle, right? So some people, like you said, integrity, growth, tension, transparency, telling the truth, right? Like I might not disclose everything because if I tell you everything, for example, on one of your podcasts, I heard about KPIs, leading indicators versus lagging. So people like to share lagging. We made this much in sales, but hey, what about leading? Let's look at your efforts. Did you really follow through on all those calls and work on all those leads? That is not being as disclosed, right? So once you start to disclose all this, you're opening the can of worms there, right? So not everyone can handle the famous thing, like, can you handle the truth, right? So again, in your experience, introducing change and introducing in such a way that majority people would not just quit and leave. How easy, I mean, you said not easy, but can we bring like more specific example, let's say in a company that, let's say we had 30 employees when we introduce change, that much of resisted and as much of them, like that many of them actually decided that it's not for them to be that
Oh, wow.
transparent. I mean,
Yeah,
introducing,
yeah. Let
changing
me.
the values in a company, it's people afraid to merge companies for that reason, right? So the clash of values.
Yeah, it's. I want. Yeah, I want to provide some specific examples for you because it is important to like understand like why and how and to help make these because they aren't easy. And like that example, you have a small company, once again, let's say 30 to 50 range side employee, and you do have to do a new, let's say, whether it's a new system implementation or you have a new sales methodology, if that's things make it forward, and I'll use that once again because you use that example of the leading and lagging indicators as an example. So I haven't met a company yet who says they haven't want to grow in size, right? I mean, that's like everybody wants to grow in size. And matter of fact, I mean, I'll just challenge the audience. If you aren't growing greater than 10%, you're falling behind inflation. I'm talking about real inflation. You're following home prices and rental prices and things of that nature, not what they show in the government things. But if you aren't growing your net profits by 10%, you're actually falling behind. You're not making more money. Your net value, look at even fast food these days, right? It costs so much more than it used to cost in the past. So you're falling behind. So that's number one. If you aren't have a company that's at least trying to grow your bottom line by 10%, you're falling behind. So that's the first pressure point is that you can't be staying flat. And the second point is, well, to do that is you're going to have to be uncomfortable. You can't just expect to get business internally. You're going to actually have to go outbound. You're going to have some level in your marketing machine where you're going to actually have to reach out and connect with people who you don't know or businesses that you don't know, organizations that you don't know. The problem is people want to hide behind marketing. They want to hide behind a system and they don't want to actually have the tough conversations of what it requires to do it, meaning we're going to fail. This is what it comes down to is we're going to fail, right? In baseball, if people are familiar with that, a good hitter is hitting 300, a good hitter, right? In sales, when it comes to outbound, 1% is successful. And so that's hard. It's hard on our mental makeup to go through activity where we're only having 1% success because we're being told 90 through our email, through our outbound, we're being told 99% no. So we have to change what success means in our head. And we have to recognize that we have to do those 99 outbounds to get the one success, right? And that we have to celebrate that one. We have to celebrate all 99 efforts plus the one to get success, as opposed to what a lot of businesses do is they'll only focus on that one successful point. Well, that's not how you're going to win. You're going to win by swinging a lot, right? By going after things. And there was a company recently I was with and working with where literally this was more, once again, multiple people in the company, but the founder was a key part of the sales process. They had a lot of the connections with it. And my working with this particular company, all I did with them is meet each week. And this isn't a small thing, as I help make them uncomfortable each week by saying, what are you doing to go outbound? And that was my accountability with them. And we worked the process and I just worked. And the best thing was a year later, they sent me this handwritten note that said, Carl, if it wasn't for you, I don't know if our business would still be here. We wouldn't have record profits. We wouldn't have record sales. And we wouldn't have more cash in the bank than we ever had beforehand if it wasn't for you to help keep that accountability on the hard things, to get to do the work, to get to the results that they needed.
Yeah.
Nothing's more exciting than that when you hear that. But once again, the hard part is the hard thing is the hard thing is the hard things, right? It's working on those things that make us uncomfortable, but it's only by doing that that we end up creating great outcomes and great businesses.
Okay, so much to unpack here, but going back to the leading indicators and lagging, right? So based on what you just described, outbound means more focus on leading because that's your efforts. You going out there, you're not depending on some kind of a distribution channel that brings you business. For example, oh, my business is all through referrals. Really, you're gonna sit there and wait for the referrals to show up, or what are you doing to go out there? Or my business is I'm getting most of my business through Google Business reviews. All those testimonials is pushing us all the leads. But what about you going out there and getting it? What if something happens to Google overnight? You're gonna shut down, turn off your lights, right? So unfortunately, a lot of us entrepreneurs find out the hard way. So I admire that you're pushing them to actually go out there and do something that is outbound. So on the same topic, then going back to introducing the culture, it's hard, but if you set up some kind of a strategy, speaking of strategies, right? You're all about strategy. Creating a strategy that, even though it's not easy, would make it through all the efforts easier to adopt. Doesn't have to be like go through the wall, right? Sometimes you can take a detour, maybe go above the wall, or some other way to get to your destination. Again, through strategy, you can make this happen. And usually it's not on lagging where you just sit and hope that the strategy will work. You actually strategize to go out and through your efforts, go get it.
Yeah, it's, and maybe it's a good time to talk through that a bit of what we call the captain strategy methodology. And it's
Yes.
7 principles that we work with. And it's what we talk about in the Lost to CEO. By the way, the book is not, even though it talks about the principles, it's written in a way that most entrepreneurs will understand. It's written in their own personal experiences of the challenge of running and growing a business under pressure, and the challenge of working with employees who do and don't want to be there, and the challenge of working with your family if you have some, of their stress you have because you are constantly focusing on doing your business. So these are real pieces. But let's start from the beginning and we'll go through these 7 parts and we'll do this quickly. So number one, you got to know where you're going. You got to have a vision for the future. Some people use this term, let's have a North Star. And so the captain, we call it the compass. Basically, you got to have a compass of where you're going. And so when you have that compass, you want to think about where the world's going to look like no less than 3 years and maybe up to 10 years or more, right? Of how you're going to make this difference. Why we do that is because when we only look ahead 1 year, it's too short of a time period. It's just about doing things. But when you think about, hey, we're going to make a big purpose, we're really going to change the way how the world's going to be, it forces you to change your habits, which goes into our next goal, which is called aspire. And we're a believer in creating some level of stretch goals. Why? Once again, it's, by the way, there's 2 differences of what we call aspiring goals and committed goals. So an aspiring goal is we're going to stretch to get to, let's say you're growing at 10%, but we want to grow at 20% next year. That you're going to have to change your habits. You don't get more hours in the day, by the way, which means you have to work smarter. So therefore, you have to be more effective, think of different strategies on how to get your outcome. That's what forces you to do. When people say, oh, I'm going to just go 3% this year, 5%, once again, you're falling behind, number one. And two, there are people out there that are going to take away your business in the future because of technology that is growing so rapidly. We're all aware of generative AI now, right? If you're not, please start using it. If you are already today, we use it consistently. We help our clients use it, right? You have to use generative AI tools to stay even up with things. Technology is doubling every 3 months now, not every 18 months. So we have to stay ahead. But aspiring, we want to change our habits. We want to set those goals. After we get the aspire, we need to have a plan, which is how to get there. Okay. Strategy, the best definition I've heard of strategy is you have point A, which is where you're starting from, and point B, which is your destination. And strategy is simply how you get there. It's your plan. So
GPS. comes to mind.
Yeah, yes, exactly. It's your GPS. It's going to tell you all the directions, all the different ways you're going to get to your actual outcome. And so strategic plan is literally just a collection of hows, how to do things to get to your outcome. So we create a plan and decide what we're going to do. And then the next thing, which is not too common in what people do, is the T, which is trim. All right. So I'm going to tell you something kind of fun. I can't mention the name in a public setting because of confidentiality things, but this will be a fun example for you. And I'm going to ask you, I'm going to put you on the spot here. Okay. Ready for this? So I was working with a Fortune 50 company, as a previous company I was working with. I don't work with a side company today. And this was one of the cascade strategy. It was very important that we got in this system implementation. And so I asked them, and they were very happy with the system. They were tracking their top 13 to 15 goals, excuse me. And then they said they said, one of the people was upset. And the group, I said, why are you upset? He said, because I have 600 projects I'm tracking. And I was like, whoa, I never met anybody, before since that had managed 600 projects simultaneously. And so I said, so how many project managers do you have to manage 600 projects? So now I want to ask you, and if you're in the audience, you could go on and think in your head, how many project managers does it take, should you have to manage 600 projects? So what do you think the typical entrepreneur would say?
A few projects per project manager. I mean, it depends on the size of a project, right? If it's a big project, again, it depends on how sophisticated it could be. That I don't know, 1, 2 projects per project manager.
So
Yeah, it depends, I think, on the size of the project and complexity, how many
it,
people
it does.
involved.
It does. Yeah. And we'll hear anywhere from, a lot of people will say 10, project managers will say 20, sometimes people will say 50, but rarely people will say 300, and almost nobody says 600. But the reality is they had 600 project managers.
Wow, so one per project. So
That's
they
right.
narrow down focus. You own it. You base. Okay, so that makes sense. So otherwise, he would not be able to stay sane. 600 projects at once.
That's right. And
Wow.
so there's a great book behind me for those who are watching on live. It's called The Four Disciplines of Execution.
Yeah, that's a good one. Okay,
They've
I
done
see
way
why.
more implementation. Yeah, it's a wonderful book if you haven't read it. They said you should focus on 3 strategic projects at a time. And they said this after doing 1,500 strategic implementations. Well, they did a tiny change. And we just had Jim Hewling on our podcast recently, who's one of the authors of this. After 5,000 implementations, they said they should only focus on one thing at a time.
Wow.
And why? Now, once again,
So
it's not just one, it's one big initiative, right? So it doesn't mean there isn't sub projects and some actions. But when you're doing one big thing at a time, it impacts everyone. And so they wanted to make sure that all the different things, and what they found was when they focused on one thing at a time, they had wild success. When they did 3 things, they would have some success. When they did 4 or more, they'd almost always fail.
is it
And
because
so
they're spreading themselves too thin at that point? Three
that's right.
project. Okay, so you got to
Right.
laser focus on one thing, all in, most important thing. That's where we all dwell on.
That's right. And so this is the biggest reason why strategic plans fail is not due to lack of vision. Most organizations have vision. Most people have aspiring goals. Most people put together a plan. Maybe not a good one, but they have a plan. But very few people trim it down to the most essential things that are going to have the biggest impact on the outcome. So one of the ways that you help do that discernment is you look at what's the potential impact of all the projects you have that you've listed, and then 2, the percentage likelihood of success. And so you should put your energy and effort on the highest probable with the greatest impact. And that's what should be the ones you're going to focus on most. And what we recommend when we're working with teams, and if they have multiple people in their company and multiple leaders that are managing, then we try to say, hey, look, you can say you're going to have 20, but at this one time, we're only going to do things where one person, project manager or executive, is managing one thing at a time. We try to not have them doing 2 things at once because, once again, it most likely is going to fail. Get that one thing done. Now, this is the surprise: is that company got done way more than 600 projects a year, because as soon as they got done with them, they put that project manager on another project, and they kept on getting more and more done because they were focused on the very few, the very essential. That's the unexpected twist, is they get way more done than 600 versus those who would have 600 projects, have 100 project managers, and they'd maybe get done 200 projects a year.
You're going against your gut feeling, right? So I see how also a lot of entrepreneurs would reject this idea. Like all of these
Yes.
important, all of these need to happen now. No, we can just have focus on one So you got to be that strong to convince them and influence them to focus on one. They will accomplish actually more. Like you said, they accomplish more than 600 projects because as soon as one down, they going for the next one. Wow, that's a wow.
Yeah, it is a wow. And so I appreciate your understanding getting through that. And I don't want to confuse strategy versus operations, right? Operations is doing the things you're supposed to be doing anyways, right? So I'm not saying you should only do if you're selling three things. I'm not saying you start selling one. Don't I'm talking about when you're trying to change something in your business, you should focus on where you can put the energy to actually make a significant impact of that change. If it's not creating a significant impact, you shouldn't be doing it at all because you're just wasting time. And
Saying that,
that's where we get more things.
so when you say strategy, it's not in the business, it's on the business. It's more strategic. Okay.
Yep, yep. And don't get me wrong, sometimes on the business thing is a significant in the business impact, right? It's just it requires more effort, more time, and to change it. Once again, to change something different, not to be status quo. So the next thing, interesting enough, that we do is we have this is gonna of the simplest of all the seven things that we have, this is the simplest of all of them, which is have a start date. That's where it'll act. Most people have an end date, but they don't have a start date. And let's say they have a 3-year plan and you're 6 months in, it's amazing how many times the strategic plan is already collecting dust in the back. So we're a big fan of using weekly initiatives. And there's some people who like to do 52 weeks. It's not a bad thing. We believe in doing, I'm going to use Dell author name 40 strategy. We like to do 40 weeks per year, so 10 weeks per quarter. Why? There's holidays. We just came off of the 4th of July holiday. A lot of people are vacationing then. Not a good week to be doing strategic work. But in the periods in between, put your 10 weeks of effort in. What you'll find is most people say it's due at the end of the quarter, right? Here, it's due at the end of the quarter. We got to do this at the end of the quarter. The problem with it, once again, is they don't work on it until the day before the end of the quarter. What we want is real concerted effort as you work on it through the quarter. During those 10 weeks, you're going to get way more activity and you get way better quality and way better results. And we've seen this done. And where once again, I want to not say everything is a unique idea. There's a book called The 12-Week Year that has sold tons of copies. And it's a great insight into how to create, once again, why it's called 12-week years, because in 12 weeks, you get more done what most people get done in a year because you do this weekly expectation of getting things done.
That's where I see also, before you go to the next one, this is where I also see a tremendous need for someone like yourself as a mentor, somebody from outside to keep the accountability. Because again, business sucks everyone in back into that routine work. And that's why everything being pushed off to the end of the quarter and last day. And you're still in the same spot as before.
Yeah, you nailed it. You're exactly right. It's why do we do this? It's our habit, right? It's not because we're bad people. It's not because we don't want to necessarily change. It's just we go back to what we feel comfortable with, answering emails, answering a customer complaint, shipping a product out the door. That's easy, right? It's the stuff we're used to. What we don't like is when we have to change how we're going to ship the product. We don't like it how we have to do outreach differently. We don't like how we might have to sell to a new group. Those make us uncomfortable. And so that's where we have to change those habits.
The unknown.
But once again, you're not going to have change without it.
Yeah. The unknown, that's where they fear. People don't want to change.
That's right. That's right. Total fear of change. And then next thing, we already mentioned indicators, big believer in KPIs, but most people track the outcomes. We focus on the leading indicators to get to the outcomes. By the way, there's this little company you may have heard of that you may have bought things online from called Amazon. They do that. So one of their big success things is focusing on the leading indicators rather than the lagging indicators. So that's the KPIs. And then finally is next. And this is why do we do this? We should be learning. When we get something done, we want to celebrate the success, but we want to figure out next. It's amazing how many organizations after they've crossed the finish line is they rest on their laurels. They want to go on vacation. They want to, hey, no, I'm a fan of vacation. I'm okay with it. Once again, I didn't say 52 weeks a year stuff. I said 40 weeks. All right, take a little time off, but make a plan for when you get back that you're starting on day one again. This is the difference, once again, in good versus great companies. The good companies will get modest improvement. The great companies they're circling around you because they are just doing so much more effort. And then you add to the multiple, if you may, of AI today. They're not just increasing you 3x more, they're doing it 100x more because of their ability to do things because they're using technologies to get there.
You touch on multiples. That's another subject that close to heart. A lot of myself included. Somehow, I believe that usually businesses sell at 3, 4 multiples. Depends on the risk level. What I found is it actually depends on where you're holding with your profits. Is one, right? Because there's a lot of other details into it, but the primary one, the capitalization, is actually the higher your profits, especially above million, they changing based on the risk level, right? And having a management system in place where the strategies that you're implementing and all those things function without the business owner himself or any other key man or other things that fall into it. So the multiple can be tremendously changed, right? It could be 5, 7, 8, 10 multiples. Public companies go 30, 40 multiples at some time. So what's your experience with that and the successes that you had when somebody comes to you and after you go through your implementations, how the capitalization, the value of the company changed once certain things were in place? Can you maybe touch on some of that?
Yeah, I'd love to. So, this has been the most exciting thing that we have been working on, and I've uncovered or discovered, if you may, in this current year, 2024, with this being recorded. So, historically, in strategic planning and execution, what you described, let's go back to the basics of it. A valuation of a company is EBITDA times the multiple. Most people think the multiple is fixed. They look at the internet and go, like what you said, it's 3 or 4. So therefore, I have $1 million EBITDA. I'm a $3 or $4 million company. But let's just use 3 for simplicity. The problem is that's not true. The internet is just an average of all of the deals that have taken place. And matter of fact, in many cases, we should be valued way above that. And there's companies that are valued way below it. Everyone thinks they're above average, but the reality is they aren't. Matter of fact, most companies are 57% discounted off of the potential value they could be. Why? You said it, is because there's too much risk in the company. What's an example of risk? The CEO does everything. That's a risk, right? Another risk is they have a client that has too much percentage of their business. There's so many. And so we actually do 40 different risk areas. We evaluate these 40 different risk areas. We actually group it down to 25 because we use a software to help differentiate it. But this is what's amazing. Historically, we create a strategic plan and we have assumptions of what we believe our activities would create a result for, right? And we could do numbers and show it. Well, today we can actually take the risk and we can calculate a dollar value and the return on investment by working on it. We can monetize the risk. This to me is groundbreaking. It's amazing. And what we do this for our clients now. We actually have a software tool. We will do an analysis for our clients. And then for the next 3 years, we'll give them a quarterly update of the results. It's the biggest no-brainer business. Matter of fact, we guarantee a 10x return minimum on the improvement of their business, just in the cost of doing it. And by the way, this is like just a $4,000 cost tool. This is if you're an entrepreneur and you're thinking of selling your business in the next 3 years, you need to buy this, because what we're actually seeing is people having a 40x return or more from this. Because when you can get that's pretty simple math, right? You have $1 million business and you can turn it, it's a 3 worth 3 million. And if we can get $2 million more back in your business because we identify the risk. So now it's all of a sudden a $5 million company. $2 million as identified value, and you're spending $4,000 to understand it. Like, that return is amazing. We're so excited about this. And then for some of the people who get this analysis, why we do it quarterly is because, they get busy. And so what we can do is then help them identify who they need to work with and then keep them accountable to get it done so they actually get the results. So that's why we're willing to offer a $37,000 tool for $4,000, is because we want to make sure they get the information. And if they decide to use it and never work with us again, we have no problem with that. But we also recognize they're going to be too busy. And so we can help them work on the things that matter the most. And it's so exciting. It's so powerful. Every single person we put them through, they've been, blow away, excited by the value that they're seeing, because this is the missing link. It's the missing link in business. Is, yes, you can increase your EBITDA, but what if you could increase the value of your business by $1 million without increasing your earnings, without increasing your revenue? Like, that's the game changer, right? When 90% of an entrepreneur's retirement is in their business, the difference of selling your business for 3 million versus 4 million is a significant difference in your retirement. What if you're able to sell it from 3 to 7 million? That's $4 million more. That's why we'll call it $4 million, $4 million strategies. That's why we have a daily podcast which goes over these things, is because we want people to understand how to de-risk their business. And it's so, as I said, it's so exciting. For me, it's like I almost want to give it for free, but it's like the problem is when you give things out for free, they don't do it. So like air, right? We breathe air for, we don't think about it. We don't pay for oxygen because it's in front of us. But all of a sudden, when we have to pay for something, we like care about it more. And so that's why we have to put a price on it, because we want people to see and recognize it and start using it. And it's amazing, right? It's amazing the results we're getting. As I said, for me as a strategic consultant, it's the most powerful thing that we have run into. And every single person I'm working with has said the same thing. The best thing they've seen in private equity in a long time.
Awesome. So, Carl, is this tool accessible online? Is it something internally that you use after someone approaches you?
It's, yeah, it's a great question. It's something internally that we use for this. We take data that comes from the market. And if they do want to understand more about it, we actually give them some more information if they want to use it directly. But yeah, it's a tool that we have that we use. It's under $4 million strategies. We do an assessment, and we can also do an assessment of your entire team. So once again, you can get some information and just do a one person assessment, but we enable you to assess with your team that's working with it. So you make sure you get the proper information from doing
Mhm.
with it. So yeah, once again, people can access this through 40strategy.com and connect with us, and then we can start your process of understanding how to get that done and evaluate it.
Yeah, it sounds like an extremely valuable tool. So, when somebody works with you, you basically run that assessment every quarter just to see where the company is holding right now and what other initiative needs to be in place to raise that capitalization.
Yeah, because two things were going to happen every single measurement. One, where's your 12-month trailing revenue? What's your 12-month trailing earnings and gross margin? And then finally, has the market changed? And so you're going to understand that. And then finally, has your risk changed? And so the nice thing is we can answer specifically the way how a private equity investor looks at a business. We answer those questions. And so then we find ways to solve it. And I keep on going back to technology, and forgive me for sounding, but what's so nice too, it's so much easier to solve these things than they were in the past. Just small example. Nobody wants to write down procedures for all their documentation, right? I mean, who wants to do that?
Yeah.
I don't know an entrepreneur like, oh, unless they're like in the business of writing documentation, nobody wants to do that, right?
Nope.
It's awful. But with ChatGPT now, we can accelerate that process with other software tools so much faster. So we can de-risk our company faster than ever before, because so much, even if it exists, if it's not documented, somebody who's buying you won't believe it.
Yeah.
Like, I used to be an auditor in my early days. And so I remember I'd go into companies and we're like, oh, well, we've got that. Well, where is it? Oh, it's in our head. That's not helpful, folks. It's not helpful if it's in your head. It has to be documented, because if you win the lottery or get hit by a bus, let's say you win the lottery and leave the company, that knowledge is now gone. But if it's written down somewhere, it de-risks the company because the new buyer believes at least that documentation is somewhere. That's just, once again, it's just another example of what we can do. But so there's another reason I want to share why it's important to doing this is when you really de-risk. Let's be honest, a lot of people want to sell their company because they're stressed out, right? They're done. They've put too much energy into it, and they're like, I finally want to get out of this business. I get it. I mean, I understand it. I've worked with a lot of entrepreneurs. They get tired and they want to be done. And so they finally want to sell their business. But then once again, they're getting discounted way too much because they don't de-risk it. When you start de-risking your business, it doesn't become as stressful.
Yeah.
And then all of a sudden, if you de-risk your business and it becomes like an oil well, why would you sell it?
Yeah. You find your original reason why you went into that business. It was exciting, not something that drains you and keeps you burned out and
That's right.
takes away all your time. I see that also as a pattern. Just the fact that if you would have a documented process and people follow that documentation, now you can actually look at numbers and see if, they say test and measure. How can you test and measure if it's not documented? Imagine, like, my favorite example to give is if McDonald's corporate announces from now on, you don't need to follow this procedure to produce French fries. do it your way. So everybody will bring their pans, their type of oil. They'll salt it as much as they want. They'll keep it on the burner as much as they want. You're no longer getting McDonald's fries, right? So for you to have consistent results and documentation, that's what it does for us, right? We find most effective, efficient way of doing it. We can reproduce it, and that becomes a standard. And until we get the exceptions and keep on adjusting to get the better numbers. So without the physically documented process, you can't really measure it. And if you cannot measure it, how can you create consistent results? And if you cannot create consistent results, what buyer would be attracted to buy something that it's a black box? I have no idea how it works. We have no idea how to produce consistent results. Yes, I see that's a tremendous need. But again, like you said, most people do not want to do it. Most entrepreneurs not interested.
No, because it's boring, right? It's boring to de-risk things. I mean, it really, right? That's the really weird thing of the dichotomy of an entrepreneur is one of the reasons why we're entrepreneurs is because we like taking risk. But the irony to make more money is you have to de-risk your business. And so this is why you bring in people to help you out, right?
Mm-hmm.
To help work on the stuff that's stressing you out at night, is keeping you up. And then you have somebody come in and then you solve and you sleep better at night. I can't tell you the number of podcast guests that have gone through this experience. And literally, this one guy's traveling around the world, still is the CEO of the company or president. I think he calls him president now. And he's having the time of his life and he never had to sell his business because it's become an oil well, right? An active oil well. That is the ultimate wonderful experiences. And once again, if he wants to sell it, he can, but why? It's interesting when you have a steady stream of consistent, good, positive income and you don't see it going away anytime soon, meaning because you've got it so well built, why would you take away, let's just for argument's sake, say $1 million a year? Why would you take that away? Why would you take away $1 million in income a year because you're just tired of it? Well, you do it because you're tired of it and you're stressed about it. But if you de-risk it, there's a company I was talking with recently doing roofing, of all things, roofing. And they have a private equity firm that's offering them over 20x their multiple, 60 plus million. Why? They've de-risked the company. They have created an amazing social channel and marketing. They have a great employee program and they do consistent quality service and they know what they're doing consistently. They have a great supply things. They've de-risked the business. And so a typical, once again, roofing company is going to get 2 or 3. Like they're going to barely get anything, maybe 1 times revenue if they're lucky. But they probably won't even that because you only get typically less than 10% revenue profits in a construction business. And they're getting 20x, almost their multiple.
Yeah.
They de-risk the business. This is when it's fun. And he's like, and I was asking him, so are you going to sell your, but he's not been on the podcast yet, by the way. He's a future podcast guest. But this is just on the prep call. And he's like, yeah, well, I'm going to roll some money into it. But he won't have to run it the same way again. And part of, once again, his joy is the building and creating a business. And so he's going to keep on doing the next side. That's the options that you have when you de-risk your business, right? You don't have that option when you don't de-risk your business.
Is that where you got the $4 million strategy? That's your focus? Companies that reach that level of revenue, they basically leaving a lot of money on the table by not de-risking it. That's where you come in with your strategies to even not without even increasing their revenue, you would bring the value of the company to be more than double if they do it properly.
That's right. Yeah, you nailed it. Thank you. You answered exactly what we do is we help increase retirement income by de-risking their business. Now, once again, we still work on strategies, we still work on core things, we still work on in the business, but by de-risking the business, I just was engaged with a new client or existing client. And they were like, they made that decision. They want to sell their business 3 years, but we made it when we made this decision, we said, we're going to do a fair approach on this, but regardless of whether you decide to sell it or not, I'm okay with that because I want you to have the best choice at the end of your path.
Yeah.
And so that's what's exciting for them. So we're created effectively a business model that by the way, I have no ownership, no equity. It's just the way I'm being compensated for it, but that where they're going to get such a big return out of what we're doing, it's a win-win, right? And if we don't create the value, I don't get any, I get very little as a result of that. But if we get the return, I'm going to be fairly compensated when I get paid by a typically private equity firm, and they're going to get their choice of whether they're going to sell a very successful business or whether they're going to keep it and become a shareholder over the future and do what they love.
I like how you're positioning it. So the whole de-risking is not just, hey, here's some strategies to grow your business. Like by going through that assessment, you're actually going to see why implement all those strategies in place, how it's impacting overall value. In addition to that, also comes to mind, again, based on stats, majority of businesses never sell, right? Under a million, it's the stats are 4 out of 5 do not sell. So only 20% sell. Under 4 million, I believe it's 60-70% do not sell. There's 50% companies fail the time of due diligence. The sale never happens because once you start to go through due diligence, you see so many issues, risks, people just back away. And in addition to that, it's also like crazy numbers. Over 70% of individuals that sold post-exit life on the first year, they really regret it. The funds that they have, like you mentioned, for the retirement, it was just all given away because somebody decided to exit now without de-risking it first. Yeah, so you're tremendously impacting the industry, the entrepreneurs, especially those that work so hard to finally to exit properly.
What's the goal? I mean, this data, as you know, is hard to come about. I've done a fair amount of research, like go with the real data, what isn't the data. I saw one data point that said there's only 50,000 businesses that sell per year. Well, they say in the US alone, there's about 34 million businesses, right? So that's
Wow.
a very tiny fraction percent, and many of those are companies that are above, once again, $1 million in EBITDA. So the first goal of any business is right to get you to $1 million in EBITDA. That's like number one. So let's work in your business to get to there, change the strategy to get there. And then two, once you get to there, okay, can we continue to scale it? But along the way, now we start working on your business to do risk. And so then you have that choice once again. Do you want to keep the business or you want to sell the business? I'll tell you what, folks, if you do have a $3 to $5 million business, it can be sold if we de-risk it. Somebody's going to buy it if we can de-risk a business. You can sell it without de-risking it. You're just going to leave money on the table. And why? This is the tough part. And by the way, I love my private equity friends. I love them. But this is the problem. Sort of like, this is going to be a little bit morbid here for a minute. Most people go through big, significant things in their life one time, meaning selling a business or, experiencing your parents, experiencing the law. These are things you experience only one or two times in your life. And so we don't know how to deal with it, right? It's way too emotional. It's your baby you're selling. You don't make good decisions. The problem is the buyers, the private equity. This is all they do. Matter of fact, they want to take, they don't say it, but they want to take advantage of you, right? They want to buy it with high risk because what their first thing they're going to do is they're going to buy the business, they're going to de-risk it and then resell it.
Yeah.
And they're going to buy it all based on debt. That's the game. That's the game that they're playing and you're not. They're playing chess, you're playing checkers. How you change that is you create better opportunity for yourself by de-risking your business, growing your business, de-risking your business. And then once again, you can make the choice of what you want to do. And that's my whole goal. My whole
Yes.
goal is to help maximize entrepreneurs' exit value and however they end up getting there. And that's what's fun. It's right. It's fun creating that dream destination for where they want to be.
Awesome. Carl, we're getting close to an end, and I just realized I forgot to mention in the beginning about the special gift that you were offering to our audience. Again, that's me being introverted and not thinking straight when making introductions. Can you talk about your gift that you want to give audience?
Yeah, once again, people who are listening to this podcast, we don't do this at every podcast, but ones who are in our genre of an entrepreneurship and private equity, anybody who is listening to this, if they send me directly an email I'm going to give it to you, Carl J. Cox, CarlJCox at 40strategy.com. And you can put this in the show notes of note. And if they reference listening to this podcast, I will send you a free signed copy of the book. And my only request is I do ask you to, if we're going to go through the work to give you a free book, is you do buy the 99-cent version, which is not too bad, right? 99 cents, the ebook. It gives you the chance. I'm just asking you to do an honest Amazon review at the end of that process. And also love to connect with you personally after as well, if you want to. You don't have to do that, but it's been a real joy to do that. We're so excited the reviews we get. Once again, I'm a small entrepreneur too, folks. I'm not this, even though we have success, I started like scratch like anybody else, or like many people, I should say. And so I do care about personal relationships. That's why I love to personally still sign the book. I don't know if I would keep that up forever, but I enjoy doing that. And so, anyways, a gift to your audience, and I hope they appreciate it. And then if they, for some reason, don't remember the email, they can still get connected in on just asking for it. Go to our website at 40strategy.com. Once again, 40strategy.com.
Yeah, we'll include all those in the description of this video below.
Great.
Awesome. Carl, it's been a pleasure. I can talk about this forever. It's fascinating, and I wish we could go deeper and bring all that stuff out. But again, I leave it up to audience to reach out to you, connect with you, and take advantage of doing things properly. Take advantage of strategies and not just go to work until you feel so burned out. Any last words before we disconnect?
I want to thank you for being a great host. You've asked great questions throughout this process, and I'm excited to see your continued future in being a podcast host. And I love to see what you're doing. And I think, once again, anytime we can help serve our fellow entrepreneurs that are working their tails off, right, to help make a difference, I hope they've appreciated these insights. And, once again, invite you to get the free book. You can go listen to the Measure Success podcast as well as a $4 Million Strategy podcast. But as I said, stay here and listen to, once again, a great host who's asking great questions to help you grow your business more effectively.
Thank you, Carl. Thank you, everyone. Until next time.